3.3%. Korea's KOSPI ETF just had its best day in weeks. Foreign money flooding back into the trade that scared everyone in July. One oversold retail name at the end. Futures barely move into the open. S&P and Nasdaq futures both nudge higher. Dow futures dip. Tokyo's Nikkei jumped 0.5%, riding that same Asia strength. Hong Kong's Hang Seng fell 1.3%. This rally isn't universal.
Here's the real story. After 3 straight weeks of chip fears dragging Korea lower, foreign investors just flipped to net buyers of the exact stocks they were dumping in July. That's not a bounce, that's capitulation in reverse.
The question nobody's answering yet, does this hold into next week, or is it just short covering into a round number? Korea's chip names led the world lower in July. Now they're leading it back up.
3.3% in one session. EWI, the ETF tracking Korea, is now on pace for its strongest week since June, a full reversal of the chip-driven sell-off that scared retail traders out in late July.
On the chart, EWI closed at 181.72, right at its 20-day high. Round number resistance sits at 190. Hold above 180 into next week, and this stops being a bounce. It becomes a trend.
Now, the number moving everything else. Cooler than expected inflation. It sent the S&P to a fresh record close, yields retreating, oil sliding toward $87. Cheaper oil, cheaper borrowing. That's the setup markets reprice into Monday.
$87 a barrel. That's where crude sits now. Down as cooler inflation cools the reflation trade too. For anyone watching energy stocks, that's the number to watch into next week.
16 days ago, the Fed put it plainly. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks, including energy. Oil falling to 87 is exactly the move that quote was waiting for.
Now the earnings that should worry you more than any of that, a blue chip name beat, raised guidance, and still got punished. Cisco beat earnings, raised guidance, record revenue on AI demand, and still fell 8% on margin worries. If a household name doing everything right gets hammered, that's the warning for every AI-adjacent report still to come.
8% wiped off a stock that beat and raised guidance. The consensus said good numbers protect you. Cisco just proved margins matter more than the headline. A 6-3 ruling just struck the tariffs down. Up to $150 billion could flow back into the economy. Real money for anyone holding tariff-sensitive names into next week.
Time for the scorecard, the week's biggest winner, the week's biggest loser, and what Monday needs to prove. Winner, Korea. EWI is up 3.3 today, its strongest week since June. Loser, Globant. It plunged after cutting 4-year guidance. Proof a cut gets punished even with the AI story intact. Monday's test, does EWI hold its breakout, or does Globant's cut spread? Right, the name I promised you. Household brand, down nearly half from its high, and the crowd's quietly flipping bullish underneath the headlines. Nike, down 48.6% from its high, trading around $41. The consensus story, retail's dead, margins are shot. Our model just flagged it oversold, up 1.7% today. 48.6%. That's how far Nike has fallen from its high. And that number alone is why most people already wrote it off. On the chart, Nike closed near 41.22, just above round number support at 40. Reclaim 43.84, the 20-day high, and the oversold case gets a lot more interesting. This is the lens we use. Every signal stacked on one chart. The crowd gauge sitting next to overbought, oversold, and the moving averages. So you're not juggling 5 tabs for the full picture. Analysis, not advice, but here's the skew. Our crowd model shows 82% agreement leaning up on Nike, conviction at 78. That's the crowd quietly betting against its own consensus story.
So, Korea's foreign buying reversal, Cisco's margin warning, and Nike quietly oversold at 41. That's Monday's setup. Full breakdown, charts and all, live at PremiChart.com and on X. See you tomorrow morning.